Hi everyone, welcome back to Be Rich. It's me Vinod, and I hope you enjoyed the video yesterday where we spoke about the roadmap to reaching 1 crore. And a lot of you in our group, in our Instagram group, had got it right. Most of you got it between 8 to 9, which I'm very happy and I'm very proud of all of you. That means you're understanding the basic principles of investing and how it works. And now it's just a question of doing it. As we were saying today, the market seems to have opened positive and negative and moving all over the place. But like I say, that's not relevant to us. What is relevant is, like in the previous video I said, we have our list of shares and companies we are looking at, which are at value. And every day we try and plug away. Like I said in the previous video, for me, it's just 2,000 rupees. I'm not saying it's 2,000 is affordable for everybody, but it's just 2,000 rupees a day. You keep at it. Before you know it, you'll reach your target of a crore or more. And if you want to put more, put more. If you can have the appetite for it. If your appetite is less, put less. But the point is, Anand keeps repeatedly saying, the kind of money, you will not go crazy if that 2,000 rupees which you put today became zero. The fascination is only when we keep looking at it over and over again and then we see it going up and down. That leads to anxiety and feeling exuberance. When it goes up, you feel the exuberance. When it goes down, you feel the anxiety. So that is why I say don't look at it over and over again. When you're done for the day, log off and move on and do other things. Your life is meant to be lived everywhere else, but then looking at the stock market and the tickers serves you no purpose. Like I said in the previous video, you keep doing it and before you know it, you'll be where you want to be. And all the stocks which we do invest in, it is a vehicle to get us where we want to go and nothing more. Speaking of stocks, there's news about LG wanting to launch an IPO in India. They filed their papers with SEBI and they approached the Indian authorities in doing an IPO after seeing what Hyundai was able to pull off here. They're hoping to carve out some money out of India and take it back home because the Korean market right now has been undervaluing companies like Hyundai and LG there in the Korean market. And Indians seem to be willing to pay high premium for these brands because they've been long-standing brands here in India. And there's a lot of brand loyalty which they've managed to build. Now they feel it's time to cash into that, so they're planning to do it. Would I look into subscribing this? No, I definitely would not definitely look at LG at all. If you are very keen on owning LG and you have some loyalty to them, you can definitely look at them outside India where they're much cheaper and they're being sold at a discount. So why are they doing this in India? Like I said, Indian market is willing to pay a high premium right now and it seems to be making logical sense. If someone is willing to give you free cash, why won't you take it? So that's all it is. Out of their complete stock, which the company will have, they only plan to liquidate around 15 or 20%, I think, and pull out around a couple of $1 billion. And what will be the value of the Indian LG arm is they're hoping it will be valued around $13 billion. That is the news over there. As I get more information, because we do not know the price band, nothing. This is all just so far whatever has been read in the media, the papers. So as I read it, I'm telling you about it. So if it is something you're very keen on, definitely do your research and due diligence. I would not be investing in the LG IPO. The second IPO, which is not happening anytime soon, which a lot of people are excited about, is a Flipkart IPO. After the Zomato and the Swiggy and all this, now Flipkart seems to be saying, okay, it's time we also cash in and make some money off this current mood the Indian market is at. And considering all the global cues, we might as well cash in our chips. But that's not going to happen anytime soon. If anything, it'll probably take almost 2 years from now because they have to relocate their offices back into India and do a lot of other paperwork. So it's going to take some time, but the intent is there to launch an IPO in India. So talking about IPO, I wanted to go back and talk about this famous story about Wipro, which a lot of you would have read about, how putting 10,000 rupees in Wipro in 1981 today will be valued around 2,200 crores with all the splits and bonuses and face value and so everything put together. And the dividend itself, what you'll be getting now will be phenomenal and you'll be living a very wonderful life if you had put money into Wipro in 1981. True, I agree. But the lesson here I want you to learn is not in the IPO. That game has changed. How companies were launched way back in the 1980s from the times of Infosys and Reliance are very different from what is happening now. There is no more value left on the table for investors. What is left is carrying their baggage. That means if there's a company of great value and is generating a lot of free cash flow and is generating a lot of profits and dividends, most private equity investors and venture capitalists will like to hold on to that cash cow and milk it, and they themselves will want to invest in other things in the market. The only reason they are willing to offload something into the public and put it into an IPO is if that cash cow is dried up and there's nothing much happening there and there's a change in headwinds, then they're willing to dump it on us. So yes, the Wipro story is very inspiring. How 10,000 rupees could have become this. But what I want you to take now is, if you're interested in making this kind of cash, where you want to have 1,000 crores and you want to do it within, let's say, 1981 to now is around 45 years. Let's say you're 18 years old, just out of school, and you want to have 1,000 crores when you turn 50 or 55. All you have to do is keep investing regularly and systematically, and you'll get there. Like I told with Dana, there's two ways to look at it. If you are very fortunate, like how I was, and you have parents who are taking care of all your daily needs, your housing, your food, your rent, everything is taken care of, and everything, whatever cash you have in your pocket is free to use for you, then you can go the avalanche style and make yourself into a monk, as they say, and forego on all immediate gratification and invest everything whole hog into the markets, buying companies of value, and look at it going the style of an avalanche. And as you get older and commitments come up, you can see how to look at negotiating your investments at that point of time. Or the flip of it, you're like, another famous example is someone known as Ronald Read. Why do I want to bring Ronald Read as an example? Ronald Read is a famous investor in the US who died in 2014. When he died, he had donated a lot of his wealth to charity, and then it came out that he had $8 million, and people were shocked. Why were they shocked? Because most of his life he was working in petrol stations as a guy working the pump and as a janitor, the person who cleans your offices and your houses, at that level in India. And he had come from a very poor family, and he had served in World War II. And whatever money he did make in life, he had been very frugal about it, and whatever he could invest, he had invested it and bought stocks, and he held it and didn't sell it. And that kind of small squirreling away had amassed into $8 million by the time of his death at the age of 92 in 2014. So that is snowball mentality. So what you do is you create how a snowball is made into a huge giant ball is, take a little snowball and you keep rolling it on the snow. As it rolls down the hill, more and more snow sticks to it. As more and more snow sticks to it, it becomes bigger and bigger and bigger. And you've seen it in the cartoons. If you have not, you can Google it. It'll become into a massive snowball. That's the idea here too. So let's say you come from a background where you are not from a wealthy background, and you happen to watch this video and you feel inspired and you cannot do much. Then you can be like my cameraman Rupert, or Rupesh. I jokingly call him Rupert, but his real name is Rupesh. Most of his earnings is taken away by his family because the situation is such that, but in the weekends he does side hustles like car valet, he does Swiggy, he does whatever he can on the side, including moving water for people. So he collects money on the side as well, and he's trying to collect and comprise that into a pocket where he can start investing, and he's trying to build himself a future. And that is snowball investing, where you don't allow your situation in life to mess with you, but you look for opportunities and ways to come out of it by taking every avenue available and trying to build. So this is what I wanted to share with you today, the story of the Wipro, where you can, yes, it's great, but that is, IPOs are not there like that anymore. So there's no point looking at the LG and the Flipkart IPOs. Like I said, all the cash in those cows have been drained. Now what is being left is skin and bones for us. So if you are looking at amassing wealth, the two ways you can look at it is either going all out, if your situation in life, you're fortunate enough to do that, or you go the other way, which is like Ronald Read, take every small thing which you can, be frugal, and keep investing, and before you know it, lo and behold, you'll be very wealthy and you won't have so much money, you really won't know what to do with it. So I hope you found this video informative and interesting as always. As promised, I'll get the second video out sometime this week, where we saw that it doesn't take you 15 years to get to 1 crore, that we did it off in around 9 years. So if we did play it out all the way to 15, we'll come and see where we finally land. How many crores do we get? And that's what I had asked in that video. If you can guess how much we would have got by the time we got to 15th year, that's 2024, put it down in the comments, and let's see if your calculations are close to where we actually got to. So nothing more else to say. Do have a wonderful day tomorrow, and I'll catch you again in another video tomorrow. Thanks for watching Be Rich. See you again soon. Bye.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.